Hey traders, Akil Stokes here, and welcome back to another episode of the Trading Blog. I want to take a few seconds in the beginning of this video just to say a big thank you for all of your support. We're getting close to 2 major milestones on this YouTube page. I'm very close to the 1.5 million views mark. We're also close to the 30,000 subscriber mark. So I know you guys have been out there hustling hard, sharing this video, hitting that like button. Just continue to do that. If you have traders that you know, traders that are in need of some education, a nudge in the right direction, a nudge to get their mentality straight, you know, share this video with them, and hopefully we can make an impacting difference on their trading as well. Now, this morning we had our private strategy lab. You guys know I do have a live trading room, but that's Tuesday through Friday. Monday, we try to really slow things down a little bit. I work with my transformation members on strategy development, trade plan development, and we do a very kind of low-key small group session, which is great. It's intimate. But today we talked about indicators, and we talked about knowing exactly what your indicator measures. We talked about setting the parameters to have your indicator measure different things, or I guess the same things in different ways, and then really how to use that said indicator in your actual trading. And it was a pretty important discussion. I know there are a lot of traders out there, and I'm guilty of this as well, that you know, you start off and you hear about all these indicators, stochastics, MACDs, and ARUNs, and CCIs, and RSIs, and, you know, all the fun stuff, and you go straight into using it, and you don't really know why. You don't really know what that indicator does. You don't know what it measures. You don't really know how to use it in the way that would benefit your trading the most. So we took a step back this morning and we just talked about, hey, this is what the indicator measures. This is what it does. This is how I like to use it. This is how I would advise using it. And that brought up, that led us to a discussion on, we showed examples of using the set indicator for stop losses. And we talked about it for both advanced pattern formation, so counter trend trading type of trades, and also trend continuation trades as well. And, you know, keep going down that line. It took us to a conversation on trend trading. And if you're going to be a trend trader, what do you have to be prepared to deal with? And to be a trend trader, to be a trader in general, it takes a lot of grit. And by grit, I mean toughness. So you can think of a professional athlete that, you know, fights and fights and fights, game in and game out, you know, whether they're up or down. It takes that grit to be successful, and trading's the same way. And it really reminded me of a portion of a great book called One Good Trade by Mike Bellafiore, where he was sharing a story about traders taking losses in the beginning of their day and then making comebacks. He always says, you know, the trading day doesn't stop until 4 o'clock. So think about it again, being a professional athlete, the game's not over until that final whistle blows. And he shared a pretty cool story about a trader of his that was down $100,000 to begin the day, you know, didn't quit, fought his way back, and ended up being, I think, plus 60,000 at the end. And just how that's a perfect example of sticking to your plan, continuing to find good trades and not giving in to those emotions. Again, the market's job is to hurt as many people, or to inflict as much pain on as many people as possible. And it will bait you into quitting. The market will give you a few losses to start your day. It'll bait you into giving up. And then, you know, lo and behold, you come back the next day and you saw that if I just would have followed my plan, I would have caught all of those winners. Many of you guys know my personal story about that. My biggest drawdown was about a $30,000 drawdown. And the bulk of it came within really a week's time, where I just got caught an amazing amount of losing trades at once. Now, partially it was my fault. I didn't have the optimal portfolio set up. I was a little overexposed in certain currency pairs, but the point is I took a big loss, and then I got so discouraged, so hurt by that loss those losses that I stopped trading for a while. And then I came back to my computer, and lo and behold, if I would have kept trading, not only would I have made all of my losses back, but I would have made about $30,000 back on top of that as well. But because I wasn't disciplined, because I wasn't consistent in my execution, I was stuck with a $30,000 deficit. And again, we see this day in and day out of the markets. So you gotta stick to your plan, have confidence in what you're doing. And that goes for the bigger picture as well. I didn't have time to put together an equity curve for you guys, but you know, my equity curve, I'll show you guys on a chart over here. Give me a second. I should get some targets back on this bad boy. But if we look at my equity curve for the year, it starts off like this. Again, the first few weeks of January were just horrible, straight nosedive. It had to be at least a 10%, at least a 10% drawdown right off the bat. And then, over the following few weeks, steadied the ship. So got into a little accumulation down here, a little consolidation, got into a pretty decent uptrend over the next weeks following that. And then right now trading sideways, with last week kind of putting us into new structure highs right here. And it's the same thing. If I would have quit down at this area, I would have been stuck with that loss. But because I'm sticking with it, I'm slowly just digging myself out of that hole. And I have to understand, it's not going to come on one trade, right? I'm not going to make one big trade and make all of this back at once. But if I continue to be consistent over time throughout the year, I should be able to dig myself out of this hole and end the year, hopefully, with new equity highs. And that's all discipline and just sticking to your guns and having grit in the market. So I hope you guys enjoyed today's trading blog video. As always, go back and watch at least 10 more episodes. There's a handful of topics that I touch on. So if you didn't like this one, maybe you'll like a different one. And if you did like this one, I'm sure you'll like the others even more. This is episode number 47, I think. So there's no shortage of content for you to take in. And for you guys interested in doing more with me, staying more involved, you can check out our website, www.tradeempowered.com. If you click the products and services tab at the top, it'll give you a whole list of the different training programs and coaching programs that we have, ranging from our flagship course, the Ultimate Trader Transformation, all the way to our live room syndicate program and Forex basic course. So check that out. There's also a lot of free education over there as well. I personally recommend the Into the Gray training. I will see you guys a little bit later this week. And until next time, plan your trade, trade your plan. Best of luck in the markets this week. All right, traders. So I hope you enjoyed today's video. And if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our tradeempowered.com website, or also take a look and you'll see more videos available for you. Have a good one.